Today's Money Metals Minute brought to you by MoneyMetals.com. Markets stood basically still yesterday. Stocks finished up slightly. Gold and silver edged a bit lower. The dollar essentially unchanged along with the 10-year Treasuries. Volatility in the markets remains extraordinarily low. The Wall Street Journal calls it scarily quiet, reporting swings in the market from high to low, the lowest they've been since 1995. Volume should pick up as the summer vacation season comes to a close. Tuesday's market gains widely attributed to a strong report on new home sales, but that good news was somewhat mitigated by disappointing data on manufacturing. Now here's a special report from Mike Gleason of Money Metals Exchange.
It is my privilege now to be joined by Gerald Celente, publisher of the renowned Trends Journal. Mr. Celente is a highly sought-after guest on news programs throughout the world and has been forecasting some of the biggest and most important trends before they happen for more than 30 years now. We've got gold up over 25% so far this year. Silver is doing even better and is up about 40% year to date. All of the corrections in the metals have been very shallow as lots of money continues to flow into the sector, especially on the dips. Have the precious metals gotten a little ahead of themselves here maybe, or will we continue to see strength here in this sector?
I don't think they've caught up to themselves. I think they have a lot more to go. And again, it's like what you said before about you hear these FOMC people coming out, all these Fed cats coming out saying, well, the economy's strong and it looks like, we're going to be raising rates. They keep BSing that. Go back to May. They never stopped. And poof, they shot down the price of gold. And that's what they're doing. That's what all the central banks are doing. They're talking up strength. They're talking up probabilities of raising Fed rates to push down the price of gold. Because once the price of gold breaks, here's our forecast, by the way. We believe when gold breaks over 1,400, and I'm saying 1,400 strongly, 1,400 in the terms of 1,480, 1,470, 1,460, that kind of range. We believe it's going to spike to a 2,000. The greatest fear that the central banks have is that people see that their digital currencies backed by nothing and printed on nothing are worth nothing. And that's why they're going to do everything they can to push down the price of gold. But at some point, it'll be out of their power.
Obviously, we've seen a pretty big rise in the gold price this year, but you think once it takes out some overhead resistance levels, it could be just off to the races and they could completely lose control. Is that what you're saying?
Yes, because this next crash that happens will be the worst crash in modern financial history. All of this cheap money pumping up equity markets, pumping up mergers and acquisition activity, and when I forgot, pumping again up the housing bubble worldwide. So when this bubble bursts, it's going to be one that we've never seen before. Look, here's the numbers, for example. Take China. Here we are, 20 years, go back 20 years to 1996. What was China's total debt? About $500 billion. Now it's over $30 trillion. Look what's going on with Europe, with the ECB. What a bunch of slime. With their negative interest rates and buying back not only government, but corporate bonds at the tune of, 80 billion euros a month? Take a look what's going on with the Bank of England. What did they lower interest rates to? Only 322-year lows. And now buying corporate and government debt. So this bubble, when it bursts, we're going to see gold prices hit through levels they've never hit through before. And remember, even when gold hit its high back in the autumn of 2011, it still didn't reach the high it left back when it hit the high in 1980, when you adjusted for inflation.
The presidential election cycle is about to enter the home stretch here. It has certainly provided a lot of entertaining theater so far, and the best entertainment may be yet to come. Of course, we're dealing with some really serious challenges as a country, and I don't want to trivialize it, but give us your thoughts on Trump versus Hillary and what you're expecting to see there this fall.
Well, the cover of our Trends Journal in the spring of 2015 was "Cowards, Liars, Freaks, and Fools, Welcome to the Presidential Reality Show." And that was 2 months before Trump got into the race. At that time, we picked Clinton. And then we went back and we picked Trump. And we picked Trump because of the issues, is what I talked about. It's the bottom line. Most people care about jobs. You look at the polls. They care about income. They care about the future. And Trump was trumping Clinton on that, and Clinton has no ground to stand on that. And considering that Bill Clinton gave us NAFTA and these trade agreements, and Trump was winning on that issue until he put his foot in his mouth a number of times and is destroying his own candidacy. So we believe that Trump should have been beating Clinton. And their campaign's not over yet. We believe that the debates are going to really be the turning key of this whole election. And they'll be the most watched events probably of any TV event in history. So we're going to wait until that happens. But the election was for Trump's to win or lose, again, based on the numbers.
And that was Gerald Celente and Mike Gleason at moneymetals.com. Live prices at moneymetals.com show gold currently trading at $1,337.45 per ounce, silver at $18.90.